Hey, what's up, guys? How are you doing? Ken's Money Matters here once again, as usual. Ken's Money Matters, Ken's Money Matters. Hope you're good, guys. Hope you're having a lovely week. Or by the time you're watching this video, you've had a lovely week and you're having a lovely weekend, because I always post over the weekend. I was meant to do a different video, but I'm gonna change paths here and talk about the Safaricom bond that was just released. I did a video on this last week, and at that time we just had like a few scanty details about the bond that Safaricom is offering, the corporate bond. I also gave a whole lesson about corporate bonds and how to buy them and all that shebang around corporate bonds. So if you want to know more about corporate bonds, generally speaking, make sure you check out that video first before you come to this video, because this is very specific into like the details of this specific tranche that Safaricom has just offered right now. But like I said, there's a video that explains corporate bonds, gives you all the details you might want to know before you jump into buying corporate bonds. It's the best video you can watch as a start before you get into this particular one that I will be reviewing now. So like I said last time, they were still going through the normal regulation and compliance processes in Kenya to offer this corporate bond, and they had not given us specific details about the bond. Right now, as I do this video, we have more details about the bond, and so I want to review it. I want to go through it and make sure that you understand exactly what you will be buying if you're going to be buying. Remember, Ken's Money Matters, we talk about the money mindset, how to make that money, how to manage that money, how to enjoy that money, how to invest that money, and how to assure yourself of a lifetime of income, basically financial freedom. We are on a journey to financial freedom here, so any investment opportunity, we talk about it, we discuss it, we try and answer as many questions as possible as well. So guys, let's get into the details of the first tranche, which is actually ready right now and people are buying it. It's already on offer. It's in the market. So if you want to buy this one, this is a 15 billion tax-free bond. Now, that is the most important bit. Safaricom is wooing investors with a 15 billion tax-free bond. The amount of money that Safaricom is looking for from this corporate bond, and if you don't know about corporate bonds, like I said again, go back to that video, because then I'm not going to explain what a corporate bond is again in this video. Safaricom is offering a 15 billion corporate bond. This is part of the 40 billion corporate bond that they have been seeking, or they are seeking at the moment. This is what we call the first tranche, or the first offer, or the first batch. Now, why is this tax-free bond? This is what we call a green bond. What is a green bond? So a green bond is basically an environment-friendly bond. So in this era of climate change and people trying to be, I would say, environment friendly in terms of their initiatives, I say companies and individuals here. So why is it tax-free? Because obviously the withholding tax is usually going to the government, right? And if the government is giving incentive for companies to engage in such climate-friendly initiatives, then obviously they don't have to charge you for it, because that's part of the incentive for you to invest in that kind of bond, and for the companies as well to offer this kind of bonds. Anyway, this is going to be infrastructure-focused bond. They're trying to expand their infrastructure across Kenya and Ethiopia, specifically Ethiopia, where they've been expanding quite rapidly. And being a green bond is going to be used in environmental friendly infrastructure improvements. Only other bond that we always enjoy tax-free is the infrastructure bond offered by the government, which is usually so good. If you get like 16-17%, you're always like, wow, that's amazing, because it's tax-free. So all the money is straight into your pocket. When you get paid, it's 100%. Now, this is the same thing. If you're going to invest $1 million, for instance, or let's say, no, $1 million, maybe that's too much. I don't want to discourage people from investing. Let's say you're going to invest 100,000. Whatever return you're going to get on your 100,000 is 100% your money. Okay? So the government will not take the 15% withholding tax. Last time we were talking about this particular one, the first tranche had not been released, and I didn't know it was going to be a green bond. We knew part of it might be a green bond, but we were not sure. So now, confirmed. No taxes. I know you're going to be asking me lots of that. No taxes on this one. Now, what is the ROI, or return on investment, for this particular bond? Safaricom is going to be giving you 10.4%. 10.4%, and like we said, is tax-free, so just do 10.4% on your investment and you know exactly what you're going to be getting. So on 100,000 investment, you're looking at around 10,000 point something, 10,300, 400. Because this is 10.4 annually. So you're looking at something just below 11,000. So you need to be comfortable with that kind of return. Before you invest in something, you want to be comfortable with the kind of return you're getting. Like I said, it's tax-free. Again, I've said the return on investment is 10.4% on this particular bond. So you calculate that based on your investment if you're going to be investing. Again, how long is this bond? period is 5 years. So again, you have to be comfortable locking your money in for 5 years. If you have other opportunities that you think you can utilize that money on within these 5 years, don't lock it in. This is not investment for you. Always consider your objectives with the investment. If you have no reason to take that money out within 5 years and you want to get this 10%, 10.4%, then you are good to invest. This bond is currently on offer and it closes on the 5th of December. I'm doing this video today, the 27th, or at least by the time I'm going to be posting this, will be around 28th, 29th. So make sure that you invest, you bid early enough, and you get involved in this investment if you're planning to. So like I said last time, Safaricom is one of the best companies. It's a stable company, good management, has good market potential, has good market coverage. I just do not see any proper competition for Safaricom. So I'm pretty comfortable with that company, even if you're buying shares or investing in their bonds. Obviously, interest rates are low right now. At a 10% return, that's actually not as good as you'd imagine. We went all the way to 18%. So getting a 10% return on investment right now isn't like the best thing, but it's still something. Now, that's why I always say you have to compare the different returns. So you want to look at it in the sense that you're going to put your money away for 5 years. You're going to get just 10.4%. Are you okay with that for the next 5 years? Or do you feel like at some point there could be other options that could give you way more return than just 10%? Again, remember, there are money market funds that could give you more than 10%. I know Safaricom right now is giving 12%. I know Nabo is giving around 11 to 12% as well. There are money market funds in Kenya giving at least above 10.4%. Money market funds comes with their own, risks and their own issues and their own. Investing is all about portfolio balancing or asset allocation. You deciding on where to put your money best, depending on, different factors. Do I need this money now? What's the opportunity cost? What's the return here? How long do I have to lock it? Will I need this money at some point within the 5 years? You're considering many factors before you actually invest money. So you don't just end up investing for the sake of it. So please make sure you know exactly what you're doing before you get into that bond. So now remember, the EABL return was 11.8%, but the EABL bond, which was 11.8% return, is actually not as much, because if you consider the tax, you're getting less than what Safaricom is giving you. So if you were to compare this particular corporate bond, Safaricom and EABL, then Safaricom is doing way better, because if you look at that taxation, then the EABL one will be coming back to around 9% net, while Safaricom is just 10.4%. If you're considering as a normal bond, which is taxed, they're actually giving like 12 point something percent. So in that sense, if you look at it, it's a really good investment. So 10% tax-free comparatively with EABL, you're doing well with Safaricom. So Safaricom is seeking lots of money to broaden its 4G and 5G networks and ramp up its data business to offset the decline in mobile calls, which has actually happened because of competition. I did say this earlier. So again, Safaricom is really focused on making sure that they monopolize the market, they retain their market share without allowing too many people to come in. So they're looking for capital to make sure that they are in a good position financially and investment-wise, and the business is going to give them the kind of revenue they're looking for. So-called green bonds are fixed income securities that raise capital for projects in renewable energy, energy efficiency, green transport, and wastewater treatment. So Safaricom is raising funds to carry out sustainability projects in Kenya and Ethiopia. The projects are hinged on 5 pillars, which include energy efficiency, use of renewable energy, green buildings, pollution prevention, and environmentally sustainable management of living resources and land uses. Now, let's say too many people go for this bond and there is an oversubscription, then Safaricom is going to might accept up to 20 billion, depending. At least that's the limit they have been given in this particular greenshoe option. Now, comparatively to treasury bonds and treasury bills, which is the other place you could put your money, we have been on like a downtrend in terms of interest for a while now. A 10-year bond right now, a treasury bond, is at 13.05%. And that, looking at the fact that that bond could be taxed, you're better off with Safaricom. So if you compare those two, then you're better off with Safaricom. So again, we have been on a downtrend when it comes to interest rates. So you want to be sure that you want to ensure that you take an opportunity if it arises, because there might be no other opportunity out there comparatively, unless we get an infrastructure bond right now that gives you 13-14%, which is tax-free. Then again, you're going to get much higher than what Safaricom is offering. At the moment, we don't have that. They are saying that despite the low yield, which again, they're also aware this is quite low, they're anticipating a strong potential of a subscription demand because of the company's profile, low risk profile, large customer base, and the growing global and local appetite for ESG linked investments. So again, sustainability is a big thing for most people, so they want to invest in those kind of companies. And again, Safaricom as a company is a big company, stable company, low credit risk. So in that sense, most people might want to put their money there. If you have loads of money, let's say you have like 100 million, or a company or an institution or a firm has like 100 million, the kind of money they get from a 10.4% is not little money. They still get good money as return. So if you're just looking for a safe investment with a good company and you just want to get very stable tax-free returns from your money, then obviously it's going to be a very good option for most investors. Now, let me know what you think about this particular bond, the details. Are you investing? What's the plan? Let me know in the comment section. If you have any questions, let me know. Until next time, I'm out.